Hey folks, welcome back to episode 5, 2024 ICT Mentorship. Over here, I will explain my understanding about that episode. I hope that you will get it insightful, and if you like it, don't forget to give me the thumbs up and subscribe to my channel if you are new. So let's go to the video. In Thursday 4:59, this is the closing, and the same day after 1 hour, this was the opening. So this is my new day opening gap. If you see, this gap is less than 10 handle. Okay, so it's near about 8 handle, not exactly the 8 handle. If it is below 20 handle, I really don't want to mark even the constant engrossment, not even the quadrant level as well. So I will just keep it. I don't need to see the precision over there. In my eyeball, I will catch the middle point. I will just guess the middle point. I will see how it is reacting over there. What we are going to learn from this video, I will explain the Asia session first, then I will try to explain about the real support and resistance. I will also explain the speed. Also, I will explain the standard deviation. There will be the opening range gap, how to use that opening range gap. Okay. After watching this video, you will be in next level. I believe that. But overall, this is my understanding. When this new day opening gap has created over there and it is too small, so I am really not interested to mark any other quadrant level or even the constant engrossment of that new day opening gap. Now look what happened over there. After opening, market went through this new day opening gap and it went higher, took that minor short-term buy-side liquidity. Here, this is my old buy-side liquidity. Below this old buy-side liquidity, I had this minor short-term buy-side liquidity. Market opened over there. It opened below, went through this new day opening gap, took that short-term buy-side liquidity. What are you doing here? Are you trading over there? No, you are not going to trade. What is your Asia session? According to ICT, the Asia session is from 7 p.m. So the Asia session will start from 7 p.m. and it is going to close around 9 p.m. Okay, so let me mark the 9 p.m. as well. This is going to be your Asia session. Let me just mark that 9 p.m. Just a second here. So this is actually your Asia session and you will actually look for entries inside that session, not before the session. Before, you will actually observe the price. What is happening over there? If it happens, it doesn't need to happen every single day. I will explain the buy setup over here. You will think the vice versa. That means for the sell setup, you will think like that. Sometimes you will see that around Asia session market will open and it won't do this type of things. It won't take the initial, minor short-term high or minor short-term low. It will consolidate, like it will be consolidated the whole Asia session. In those days, this setup is not going to work. That means this concept is not going to work. You will wait specifically this type of incident. If it happens, then you will predict the entry inside that Asia session. So after opening over there, market went higher and take that minor short-term buy-side liquidity. Failed to take that extreme buy-side liquidity or old buy-side liquidity. Then market went lower and it has taken that short-term minor sell-side liquidity. Okay, this is also minor short-term sell-side liquidity. Now, when market has taken that short-term minor sell-side liquidity and the minor short-term buy-side liquidity, this is going to be your initial buy-side liquidity. What is the other name of this initial buy-side liquidity? This is your real support or resistance level. This and that level over there. The initial sell-side liquidity and initial buy-side liquidity. This is your real support and resistance. Yeah, I will show you the way ICT has shown us, but let me go step by step to the end of this video. I will try to make it a little smaller, okay, not the longer video. After taking that, then look what happened. Market went through this new day opening gap one more time. So first market went through this new day opening gap, it went higher, take minor short-term buy-side liquidity, then it went through this new day opening gap one more time, take that minor short-term sell-side liquidity, made this initial buy-side liquidity, then market is just doing this type of things. What are you doing here? You are not doing anything. You are just observing this initial buy-side liquidity and initial sell-side liquidity. Are they going to be taken before 7 p.m. because this is your Asia session. Now, just before 7 p.m. when market was going, okay, market was over there. It was falling. Then it stopped over there. Did it take that initial sell side liquidity? No, it didn't take that initial sell side liquidity. Then just before 7 p.m., look at this run, a very energetic run. When we got this energetic run and market went through this new day opening gap by that specific candle, what is the next target? What is market telling you? Where it is going to, where it is going for? To that specific high or the relatively equal highs, that initial buy side liquidity, finally that buy side liquidity. That is the target for the market, because market told us that I'm not interested to take that initial sell side liquidity. How do I know that? By that displacement. Look at this displacement, buy side imbalance, sell side inefficiency just before the starting of Asia session. And this run went through this new day opening gap over there. It went through this new opening gap. Then around 7 p.m. what happened? Look at this candle. I just don't need this line anymore, because you know this is the starting of the Asia session. This candle tapped to this new opening gap high. Then it went higher. First it has taken that relatively equal highs. Then it has taken this initial buy side liquidity. Finally it has taken that old buy side liquidity. Now you can see that there is a buy side imbalance, sell side inefficiency. You can think that market is reaching for that, buy side imbalance, sell side inefficiency. It would love to trade that on, then it will go higher. No, it's wrong. It has to leave this open over there. If it leave that open, it is going to be high probability. You would love to see that market is not actually trading some kind of bullish fair value gap. If it trade that, then it can be consolidated, or it can be low probability. That means market after taking maybe these relatively equal highs, then market will fall, something like that. But if it left that open and if it work as a breakaway gap, that is the confidence that is going to build the confidence that no, market is extremely bullish. Okay, so after that run, when it tapped over there, this is the bullish order block. Now why that is the bullish order block? I have explained this bullish order block in my account or in my channel. I really don't want to explain it over here. Just I would love to complete this one by one sentence. Okay, this is the low, this is that buy side liquidity. See, this is the buy side liquidity, this is the low. Where is this candle exactly? To the 50% of that specific run. So this is the middle down close candle, and look, this is the only down close candle. Okay, this is my experience or my explanation. ICT didn't explain why that one is the order block, so I don't want to explain that as well, but I just showed you what I have showed you in my account, okay, in my channel, in my observation. Now this order block, see this wick, the lower wick, let me make it a little bigger, lower wick, this is the discount wick. So ICT actually took his buy when market came to the lower portion, or the opening, okay, the opening of that order block. He took his buy exactly over there, and he was expecting that market will go through this buy side liquidity and then it will come back again to trade that fair value gap. No, he didn't expect that one, because if it happened, then it will be the fake breakout. That is, market went higher, take the liquidity, it will start to fall, maybe he will be stopped out. If he get stopped out over here, it's okay. Getting stopped out is okay. So some of you always think that, okay, I took that buy and it should work. If it doesn't work, that means this concept is not going to work. No man, you're wrong. You should think that way, that it is the most obvious thing that market should go higher to take that buy side liquidity. Why? Because before 7 a.m. market failed to take that initial buy side liquidity. Okay, sorry, sell side liquidity. It failed to take that initial sell side liquidity. It has given you this speed move, and the breakaway gap. So it should keep going higher. If you get stopped out over there, it's absolutely okay. Just this time it didn't work. That doesn't mean this concept doesn't work. Okay. So finally, when market has traded that new opening gap high, very next candle closed over there. Then this candle, where did it open? It closed there, opened above there. See the speed that market really would love to go higher. That's why it even doesn't have the time to open here, then go over there. It opened over there, went to the discount area, to that discount week, came here where ICT actually took his entry, then boom, market went through this buy side liquidity over there, this relatively equal highs. Then market come back again little lower, boom, market again went through this initial buy side liquidity. After going over there, what happened over there? This run above this relatively equal highs, this run above this relatively equal highs. Just look, see, speed. Market doesn't need to come back again over here around that area. Now here you have this volume imbalance as market went above this initial buy side liquidity. Obviously you can see that it came back again over there. When market closed above this initial buy side liquidity and opened over there, look over there, when it went little lower, that is your another entry. Why this is your another entry? Because this is called precision from the ICT price action. How do I know this is the another entry? That's why you have to journal. You have to take the screenshot how it is going to that old buy side liquidity. Okay, you have to take the journal, and by taking journal in time, you will build your confidence that you can push your button when market opened higher. It closed there, opened higher, went lower. I am going to push my button to take the buy. Or maybe this candle when it came back again where to that specific volume balance, you push your button over there, there is another opportunity to take buy. Then market went higher. Now how far it can go? See this run, it went higher, come back again, failed to take that initial buy side liquidity, then it closed where? Above that high. When it closed above that high, then this price leg, it should be measured. Okay, so if you use your feet from low to high, okay, so from low to high around that area, and if you use your standard deviation, you will see this is minus 1.5 standard deviation, this is minus 1 standard deviation. That means this leg, if you just duplicate this leg, then it will be the until that area minus 1 standard deviation. This is the minus 1.5 standard deviation. ICT took his target around the 50% of that range. Okay, so around that 50% range, that is the most reliable range in his opinion where he actually closed his trade. So that was the Asia session, and if you see that this type of things is happening over after opening the new day opening gap or the Asia session, you will be able to trade this type of things by using minus short-term buy side liquidity, minus short-term sell side liquidity, initial buy side liquidity, initial sell side liquidity, and finally the old buy side liquidity, or maybe the old sell side liquidity, vice versa. Okay, so when market went higher around that area, what it has created? Bull flag. People are thinking that market is going higher again to that specific range, but what happened? Market fall. Why did it came back? Exactly to this new day opening gap, went higher little bit, where it tapped that initial buy side liquidity, which is actually your real support and resistance level. Okay, it tapped over there, market went lower, come back again where? To that specific volume balance. How you are going to think that? Because this is your resistance now. This initial buy side liquidity is your resistance now. It has been rejected from there, come back again to this volume balance, you will take your sell. Where is it going to be your target? This is your new week opening gap. Remember from Sunday we got that new week opening gap high. This is the high of the new week opening gap. So that can be your target, or maybe this initial sell side liquidity. See this relatively equal lows or the initial sell side liquidity, it can be your target. Then market went here in this new week opening gap, worked in this new week opening gap, and then finally this is the ending of the Asia session. Okay? The Asia session has ended over there. Now the way market went higher and it has been traded around that area, you can see every single time then market used that old high as well. This is the old high. After trading that old high, market came back again around that area, went higher again. This is a very nice bull flag again, then another boom. The problem, I mean here from 12 to 12:30, that is the your opening gap for the London session. How you are going to use that opening gap? The way you have used that new day opening gap, you are going to use that opening gap for London session at the same way. If this type of themes or picture you can see around the London session by using the opening gap. What is your opening gap? From 12 to 12:30. You are going to use the same concept over there as well. Okay. Look at this initial sell side liquidity, how beautifully it has been reacting over there by using this new week opening gap. over there around that initial high. The market went higher, bull plug, market fall. He has actually explained all of these things around that area. Okay, so when this everything is over there, the Asia session is done over there, and I have already explained everything. So I am going to close my session by the electronic trading hour and regular trading hour. That means the opening gap. I would love to close my session. This episode. This is all my understanding by ICT's episode 5. Okay, so I know that it's a very small video, but this is all I have understand. I have got from his episode 5. So don't get disappointed, or brother, you just wasted our time. I'm sorry if I have wasted your time. Okay. So this is your opening gap. I'm going to mark. You have to go to your regular trading hour. If you are using the trading view chart on the right bottom, you will see that there is a how to show this. I don't know you can see it or not on the right bottom over there. Electronic trading hour and regular trading hour. So if you miss the entry from your electronic trading hour, you will go to your regular trading hour. Okay, regular trading hour means this is the closing of yesterday's 459. This is the open around 9:30, the opening. Okay, so the street traders, they are seeing like the chart like this way. This is the closing for them, this is the opening for them. Now what you are going to do, you are just going to mark that opening range. Okay, so the closing and the opening. So this is your opening range gap. So most of the time, if market close open lower, if the market close open lower, it has closed over there, it opened lower, most of the time market at least go until the constant encroachment, until this 50% of that opening range gap. If the opening range gap is too big, okay, if it is too big, then it reach until that constant encroachment. Not always, but most of the time. So there can be an trade for you if you do the journal, and if you see that 90% of the time, actually if the opening gap is too big, then market after opening it reach at least until that 50%. So simply you can push your button over there. You don't need to wait for anything else. You will push your button and you will close your trade over there. You have to do the journal. Don't believe whatever ICT told or whatever I'm telling you. Don't believe that. Instead, go to your chart and see it is working or not. Okay. So all you can see that at the opening gap, market went higher, come back again lower, take that low. Okay, from that 50%. It has been rejected from that 50%, went lower, take that low, then it went higher. What is that? Minus short-term sell side liquidity. Market has taken that minus short-term sell side liquidity. What is that? Minus short-term buy side liquidity. Market has taken that short-term buy side liquidity. It has traded exactly that initial sell side liquidity. Remember this real support and resistance. This is that initial sell side liquidity. Market has traded that initial sell side liquidity, fall again, and after taking this minus whatever it is, or minor short-term buy side liquidity, a market has traded over there, then it fall again, then this is also the price action around that area. You can use the AM session the way you know how to use the 7 AM to 8 AM, then 9 AM. I'm explaining for by the last four videos, by the last 4 videos. Okay, so that was all about this video or about this episode. I hope that guys you will understand or you will get some insightful information from this episode. I am just filtering all the information from ICT's video to here according to my understanding. So if you like it, don't forget to give me a thumbs up and don't forget to subscribe to my channel if you are new. Until the next video, cheers.